Hey everyone, meet Kevin here. So Tom Hanks has the virus and the market is opening down yet again. Today is definitely not a day to be wearing the Rafflecopter shirt or to be holding a death rune. And I'm sorry for all the video game references, but I will say video games give me comfort, not only when I'm lonely and stuck at home, but they make me think of happy days in the past when there was no outbreak going around. Well, today I want to tell you exactly what to do and what not to do when it comes to real estate. But first, I need to make a correction. In a prior video, I said that it would take every single American spending $87 less per day to put the economy into a recession. Well, I made a mistake. I was referencing another video that I had made, and I should have said it would only take $87 per month. That's less than $3 per day to put the United States economy into a recession. Think about that for a moment. If every single one of us spends just $3 less per day than what we usually spend, that's literally 1 cup of Starbucks less per day, the United States economy will go into a recession. That's really scary, especially since Italy is on such lockdown that restaurants, cafes, bars are all shut down. The only things open are supermarkets and pharmacies. And in Germany, Angela Merkel says, you know what? 2/3 of us Deutsches are probably gonna get the coronavirus. And then Trump says, you know what? I'm done with all Europeans starting Friday at midnight. Things are starting to get a little heated. Pretty much the only thing not getting heated right now is activity on satellite imagery. In fact, take a look at this before image here of rush hour traffic in Palo Alto, California, compared to what it is now. Then we can do the same thing in downtown San Francisco, looking at the before and the after. The same thing is true for the before of the Grand Mosque in Saudi Arabia and the after. Toll roads before, after. Airports before, after. Tiananmen Square before, after. Tokyo Disney before, after. And folks, this is all just really reiterating what I'm hearing from friends, colleagues, and family members in areas like Seattle and San Francisco, which in America, we're not even technically on a lockdown yet. And we've got restaurants that are usually busy and bustling for lunch with nobody inside. There are even now buyers in my county canceling real estate deals because the down payment they were going to use was coming from the stock market, and now they don't have money anymore to buy the place they were going to buy. On top of that, I'm hearing that new construction developers are starting to panic a little bit that they can't get the inventory off the shelf, which I hate to say it, but new construction is usually the tip of the iceberg when we start having problems in the marketplace. That's not good. It's also not good that Tesla's putting old chips in Model 3s in China, and now Tesla's in trouble with China for putting in old crap into new cars. That kind of makes me feel bad about pulling the trigger on some Tesla stock the other day, which kind of reiterates what I said in my video. So let's just splurge and spend the rest of the money on Tesla.
And it's gone.
But at least NASA has found a way to see the bright side of things in that here's a picture of pollution during a normal Chinese New Year, like last year, 2019. And here is a picture of Chinese pollution during Chinese New Year this year during the outbreak. As you can see, there pretty much is none. And if all that weren't bad enough news, the Consumer Price Index said inflation for February registered at 2.3%, which makes me nervous because if the Federal Reserve is nearly 100% expected to drop rates again, and we continue to print more and more money, I wonder how inflation will not end up happening, which would be even worse. So with all that vomiting of bad news that I just did, how are we going to deal with our real estate? What should we not buy? What should we do? And what should we buy, if anything? Let's get into that. Also, keep in mind, every weekday at 9 a.m., I go live to answer your questions. You could join in the link below. There is no monthly fee to be a part of the live streams, and I'd be more than happy to help answer any questions that you have about finance, real estate, or anything. All right, folks, let's start with the nasty list. This nasty list is basically what I do not want any of y'all to touch if you're thinking about buying real estate, which obviously you all know I'm a real estate fanatic, but I want to just make it very, very clear that the things that I'm about to mention, I would not touch with a 10-foot pole right now. Now, this might piss off some real estate agents, and I'm really sorry for that, but now is the time to provide more value and, bite the bullet and kind of let people know, yeah, you know what, these are probably not the things to be buying right now. Number one, new construction. I hate to say it, but new construction is the tip of the iceberg in that new construction is generally priced at the top of the market already. When you buy new construction, you generally overpay a little bit. It's kind of like getting a new car, though not as bad. Generally, you buy a new house, if you try to sell it right away, you typically lose money. And I'm not even talking about fees. Sales price usually goes down right away after you buy new construction. Builders try to prop it up, but it's really hard to prop it up when things like this are going on. In fact, I'm hearing that people who are walking through new construction offices are getting pressured by multiple agents and lenders at the new construction model homes on a Tuesday. That's weird. So new construction, scratch that off the list for the time being. AKA, don't buy new stuff right now. Number two, stay away from any kind of multifamily real estate where the rent is already at market value, especially if that multifamily building needs work. I know you always hear me talking about buying fixer-uppers and getting those sweet, sweet wedge deals, but when it comes to multifamily, the last thing you want is something that has market value rents and needs work. That is the worst combination. You will get ripped off right now buying multifamily real estate with rents that can't go up, with rents at the top of the market, which means you might have to kind of drop rents if things start getting difficult. And you don't want to have to deal with old systems in multifamily, old electrical, old plumbing, old roof. You're just not going to make money on overpriced multifamily right now. Be very, very careful. So stay away from new construction, stay away from overpriced multifamily. I'll show you exactly how to buy multifamily in this video. Stay tuned. Number three, now's probably not the time to look for your dream home. A nicely remodeled property that's an upgrade from what you're renting, if it's gonna be the first time you're buying something, now's probably not the time to do that. In fact, a lot of people, they come to me and they say, well, Kevin, I'm renting a 1-bedroom right now, but I wanna buy a 3-bedroom, 2-bath house. I don't know that now's the time to make that upgrade. I'd rather see somebody who's renting a 1-bedroom buy a 1-bedroom right now. Stick within your means, and now's not the time to expand. I'm not suggesting it's not the right time to buy because I think there are a lot of opportunities coming. I'm gonna talk about that in a moment. And these are opportunities you wanna be ready for and educated for. So this is why not only do you want to get your 2 free stocks with Webull because it's Happy Webull time, but you also want to use the coupon linked below to join those courses so you can be educated. After all, if you're going to be quarantined, you may as well get educated so you can go get those deals. But really, the problem with remodeled properties right now is remodeled properties generally sell for full market value. You don't want to be paying full market value right now. You want to be paying less than retail if you're buying. Very, very, very important. Now, I think this one goes without saying, but I don't recommend getting into luxury real estate right now. A lot of wealthy owners, buyers, and sellers have a lot of money tied to stocks, and when stocks do poorly, I've noticed that luxury real estate buying tends to slow down. So maybe that's similar to the analogy I made earlier where people are canceling deals because their down payments and their stocks went away. I think that gets exacerbated in the luxury market. Now, some people say luxury buyers are so rich that it doesn't matter, but I still think it matters. Number 5, this is absolutely the worst time to buy real estate out of your 30-minute radius. Anytime markets go through difficult periods, you want to be in your actual market to know which areas of your neighborhoods are doing the best and which are doing the worst. It's nearly impossible to do that if you're buying outside of your area of expertise. I want you to stick within the 30 minutes to where you live. This is a terrible time for people in Washington or New York or California to start buying real estate in Idaho, Ohio, Arizona. I think it's a bad idea. I know there's an allure of cash flow, but I think it's misguided. This is a personal belief, but I like the idea as well that if I need to, and I mean I already do this, but let's say I was a regular employed person and I had rental property and I needed to jump in and manage my own properties to increase the cash flow, at least I have the opportunity to do that if I'm local. I don't want to have to hop on a plane to go manage my own properties to bump the cash flow that I have because I need some more money because there's a problem going on. At least I can do it if I'm local. To me, that's a huge value. Even if you don't manage your property yourself or you don't want to manage your own property, at least having the opportunity to do that is a type of a safety net for you. It's like a built-in side hustle that you can actually pay yourself for. All right, so now we know what not to do. What should we be doing right now? Well, number one, paying off any kind of hard money financing we have, or obviously high interest debt. Be prepared. The more we can clean our debt pipeline, the more we can be prepared to swoop in on what I think is going to be, I mean, I hate to say it, but there's going to be a good season of buying probate deals where people died, trust sales, divorce sales, or any kind of distressed real estate like short sales or foreclosures. These opportunities are going to happen, especially if the outbreak continues to spread at the rate that it's spreading. I personally believe there are going to be more of these deals available than there are regular sales because I personally don't believe we're going to see normal sellers willing to put their properties on the market during an outbreak. And I don't believe regular home buyers, like the HGTV kind of buyers, are going to be shopping during an outbreak. So we're going to remove this sort of normal higher end real estate from the market, and we're going to be stuck with the fixer-uppers, which, yeah, that's going to soften prices temporarily, but I believe that's going to be a buying opportunity. So minimizing our debt, huge right now, so that we're ready to buy. Now, on one hand, minimizing our debt, great idea right now, but on the other hand, I'm also looking into the potential of building a war chest by opening up more credit lines, establishing larger lines of credit, so that way, if and when deals come up, I'm ready to act on them. And I'm even debating the idea of not only doing refinances to lower my rates, take advantage of lower rates that we thankfully have right now, but also potentially doing cash out refinances, where I could take money out of properties now, put that in a war chest, and be ready to buy deals as they come up. So there's definitely this balance right now of paying off debt and potentially taking on debt to have a war chest, as long as your tenants are paying for that debt for you though. All right, real estate investors, what kind of properties should we be looking for? Now, I have a feeling we all already know what kind of properties we're gonna be seeing coming up, but there are 4 types of below market value transactions, but there's an asterisk on a couple of these. So let's go through them. The number 1 method for getting deals right now, especially in this market, single family cosmetic fixers. You want to find properties that have dual pane windows, newer roofs, copper plumbing, newer electrical systems, but you walk in, the carpet's nasty, it's got old wallpaper, old hardware on the doors, old paint. That's the kind of stuff that's going to give us big money right now. And that's also going to be what helps us insulate ourselves in the event the market does fall temporarily. I'm very bullish long term that we're going to get through this outbreak, and that's why I do think this is going to be an opportunity to pick up some sweet deals. But here's what I really want you to look for. I want you to look for that $200,000 fixer-upper in that $320,000 neighborhood, so that way when you put in $20,000 for paint and carpet, or you know what, you buy $10,000 of material and you go do the work yourself because you're quarantined and you're now painting the walls during the quarantine. Now it's kind of like you're creating wealth while you're stuck in quarantine working on your fixer-upper. That's big money right there. And now you buy a $200,000 place, you're into it for $210,000 or $220,000, and now you're in a $320,000 neighborhood. you've got yourself a 35% wedge. So prices would have to fall 35% for you to break even. That's a whole lot better than buying a place for $320,000 right now and then prices falling 10% and you being upside down 10%. So you really want that fat wedge. All right, the number 2 type of wedge deal that you can get is called an over-improved deal, but this is really a special type of deal. It's not a kind of wedge deal that I would be going for in this particular market. So I'm crossing the O off for this type of market. Don't buy the O. The next best method, this is my favorite as well. This is the wedge rent method. This is where you're getting multifamily, not necessarily a fixer-upper multifamily deal, but you're getting multifamily with below market value rents. There are a lot of ways to figure out if properties are selling for below market value rents. But the most important thing for you is to find a multifamily deal that has good systems, good electrical, good plumbing, good roof, but the rents are low. This is going to give you tenant leverage because your tenants are gonna wanna stay longer, and if you can raise the rents, you're gonna bump your price up, and boom, insulate yourself from any kind of market shifts. So you've gotta figure out how to either get cosmetic fixers for single family or multifamily deals where the rents are less than what everything else in the area is renting for. Now, the usual 4th method for wedge deals is taking advantage of things like doing room rentals, rent to rent, or Airbnb. But I hate to say it, I don't think Airbnb is the right play, especially in this kind of market. Maybe room rentals, college rentals, but I'd be careful. Right now, I would really be focused on number 1, single family cosmetic deals. They're gonna be coming up. And multifamily, which can come up distressed as well, where those rents are below market value. That's where the money is. And you've gotta know how to identify those kinds of opportunities, value those deals, and when you buy them, manage them correctly or renovate them correctly. Because you can buy a good deal, but if you screw up the renovation, you lose a good deal really fast. Look, there's no way around this. The outbreak is coming, and there's some rules we can follow. There are deals not to buy, there's debt to pay off so we have more opportunities and more of a war chest to go shopping for good deals, and stay focused on the 2 main deals to get right now. The cosmetic fixers in the single family space and the wedge rent deals in multifamily. You gotta learn how to get those deals and be prepared to go snatch them up. So I hope to see you in my live streams every morning at 9 a.m. Get your 2 free stocks with Webull. Happy Webull. And folks, stay safe out there.